Johnson. I am the founder of Alpha Insurance Trade Association. Our members are independent insurance service providers. Among other things, our association is a non-profit advocate for the insured. This presentation is designed to introduce you to the many ways our association can benefit you. Our attorney is Carrie Fields, a former staff attorney for the Texas Department of Insurance Enforcement Division. I doubt there is another attorney outside of TDI itself that has a more competent knowledge of Texas laws as it relates to insurance, or a more intimate understanding as to how TDI interprets and enforces these laws. Carrie has been working with us to ensure that our program fully adheres to all state statutes. Our association is committed to making a difference. Our mission statement is, "Success without purpose is meaningless and empty." To that end, 70% of the net profits done by our members is donated to a worthwhile charity. The primary charitable organization is called Life Forward International and is currently structured under the umbrella of Waterstone, formerly Christian Community Foundation. So how does this benefit you and your company? Well, within our association are public adjusters who, among their other duties, literally volunteer their time to support the charitable purpose of our association. Why is this significant? Because licensed public adjusters are the only people, outside of certain lawyers and general property and casualty agents, that can legally represent your interest in a claim. When you file an insurance property claim, your carrier will send out an adjuster who has been trained to protect the interest of the insurance company. A public adjuster is a person who has been trained to protect your interest. In commercial properties, licensed professional representation is especially important. Sometimes contractors will offer to work with your carrier on your behalf in hopes of getting the job, and using them to negotiate on your behalf is probably the most common mistake made by those filing a property insurance claim. The problem is they lack the training, the license, and the legal authority. In fact, contractors who attempt this violate the law, and carriers know it, but they allow it because they know that contractors have no legal authority. It gives the carrier unopposed freedom to do whatever they want. This is why contractors are so ineffective in negotiating a claim and why carriers don't mind working with them. However, the Texas Department of Insurance and the Texas Association of Public Insurance Adjusters are not so forgiving. They are interested in any information you can provide and encourages you to report these contractors so that TDI can enforce legal and administrative actions against them. The toll-free number to call is 888-327-8818. The good news is that through our members, you have access to free professional representation from licensed public adjusters who have the legal authority and the legal training to positively affect the claim settlement on your behalf. Another common mistake made in commercial property insurance claims has to do with low-bid contractors. When your company is paying for the repairs out of your own budget, the norm is to find a good contractor that will work for the least amount, and that's understandable. But when it comes to insurance work, the low bid is irrelevant. Why? Because insurance companies will only pay the incurred cost of repairs up to a standard set price. If you find a contractor who will work for less, the carrier will only pay the lesser amount. That is why the low bid is irrelevant. On typical replacement cost value policies, carriers control this by paying in two checks. The first check is a depreciated amount called the actual cash value, or ACV. The amount of depreciation is loosely based upon the age and condition of the covered item prior to the loss. For example, if you had a 20-year 3-tab roof that was 10 years old, they would depreciate that item 50%. If you had a $25,000 deductible and the carrier determines that your roof would cost $300,000 to replace, they would depreciate that item 50% and then subtract your deductible, making your first check only $125,000. Not to worry, once the work of repair is completed, they will release the depreciation holdback and pay the full amount of repairs less your deductible. In this example, you would only have to pay $25,000 for a $300,000 roof. Not a bad deal. But when it comes to receiving the final check, the carrier will typically want to see some proof that the repairs were done and want to know the amount you are being charged. If you were able to get the work done for less than what the carrier allowed, they will take that money out of the second check, the depreciation holdback. In our example, if you got a $300,000 roof replaced for $250,000, the carrier would only pay $250,000 less your $25,000 deductible, or $225,000. You still pay the same amount, your $25,000 deductible. In an insurance claim, you receive no benefit by going with the low bidder, but you will have to deal with the reasons why he was a low bidder. Insurance companies will gladly pay the lower amount, but they will not warranty the work of your contractor. If your contractor does not adequately perform his duties, you get stuck with the headache and cost of dealing with it. In any case, insurance companies do not allow you to keep the difference when you find a contractor who will do the work for a lower amount than what they allocated, because your policy is not designed to allow the insured to profit from a claim. Carriers are required to pay the money necessary to bring you back to a pre-loss condition. Nothing more, nothing less. Insurance policies are designed to protect you in the event of a loss, not to make your company money if you incur a loss. When it comes to insurance claims, using the open bid process is irrelevant simply because insurance companies do not allow you to receive any benefit from the lower price. For insurance work, it is better to choose the best contractor you can find who will work within the amount allocated by the carrier. Another common mistake made in insurance claims relates to acts of God. Many companies are reluctant to file an insurance claim because they are afraid it will increase the cost of their premiums. This can be a valid concern, but it is typically not the case for claims that are caused by acts of God. Acts of God are things like hail, lightning, hurricanes, tornadoes, earthquakes, volcanoes, or pretty much anything else Mother Nature can throw at you. When a loss is caused by an act of God, you are typically exempt from penalty. In property insurance, it is not typical for carriers to raise your premiums or increase your deductible, cancel your policy, or penalize you for filing a claim. In most cases, about the worst thing that happens is they do not renew your policy at the end of your term. But this is usually no big deal. All you need to do is switch to another carrier. Usually there is no downside to filing a claim when the loss is caused by an act of God. If your agent tells you otherwise, I would get a second opinion. Another common mistake relates to actual cash value policies. These types of policies will only pay the depreciated portion of your repairs less your deductible. In the case of our example, a 20-year 3-tab roof that is 10 years old would be depreciated 50%. If the insurance company determines that the cost to replace your roof is $300,000, they will pay you $150,000 minus your deductible. That would only be $125,000 for a $300,000 roof, and that's it. Usually property owners with actual cash value policies don't find out what kind of policy they have until after they suffer a loss, and then it's too late. This is especially devastating when your property suffers a major loss. The money your company receives will typically only pay a small amount of the repairs and leave you stuck with the rest of the financial responsibility. ACV policies are attractive because they have lower premiums, and unfortunately, insurance agents sometimes do not explain them well. If you have a mortgage on your property, the bank probably required that you get a replacement cost value policy. Lending institutions know better and usually require that the property carry adequate insurance. If you have a mortgage, you are probably safe, but if you're not sure, I would check with your agent. Another common mistake relates to real estate owned or REO foreclosures, particularly on large commercial properties such as apartments. When a bank forecloses on a property, it maintains the insurable interest. These properties are often neglected and usually need some sort of refurbishment. Because of that, one of the first things a bank should do when they inherit an REO property is to find out if there is any opportunity for a claim to be filed that would pay for part of the cost. For example, if a roof is old, chances are it has been through many storms. It is often the case that these roofs would qualify for replacement via an insurance claim. Most banks don't consider this simply because it never crosses their mind, causing them to miss the opportunity or incurring the costs themselves. Even for those banks who attempt to receive benefits from their insurance policy, they will typically hire a public adjuster to represent their interest at a cost of 10% of the claim settlement, another unnecessary expense. Our members will evaluate your foreclosures and even represent your interest to the carrier, all at no cost whatsoever. One of the first things a bank should do upon foreclosure is to have one of our members evaluate the property for any possible insurance claims. If a property qualifies, the carriers will be required to pay for the restoration, and sometimes that can add up to hundreds of thousands of dollars. So what can our members do in regards to your insurance-related damage? The best way I can think of to introduce our service is by example. This property is called The Creek. The asset manager is Charles Brashear, who works for Papago LLC. Although we handle all types of insurance losses, this example relates to the roof. Like many commercial properties in the state, the roof had been damaged by hail, but neither the asset manager nor the management company knew it. All they knew was that their roof was old and worn out and needed to be replaced. So the asset manager asked the management company to obtain several bids. If a property has a typical replacement cost value policy, it doesn't matter how old or worn out the roof is. If it qualifies because of wind or hail damage, your insurance company must pay the cost to have it replaced, less your deductible. Amazingly, 90% of the qualifying roofs out there are left unrepaired. Why? Because light to moderate hail damage cannot be seen from the ground. In fact, if you don't know what you're looking for, it's hard to identify even when you're standing on the roof. It takes a trained eye. Most roofs that would qualify for replacement from an insurance claim are never addressed simply because they never get inspected. Fortunately for Papago LLC, the management company passed our information on to the asset manager. The bottom line? They received an insurance settlement of over $357,000 for a repair contract that was just over $279,000. This was enough to pay their $25,000 deductible in full, upgrade their roof to a 30-year laminate, repair the damage to their dry-rotted chimneys, which was not covered under their policy, and left over $50,000 in their pocket. So here's the question. If carriers only pay the incurred cost of repairs, how is this possible? It's called indemnification. When an insured has a typical replacement cost value policy, the insurance companies are required to pay to bring the property back to a pre-loss condition, to include all the covered items damaged in the loss, not just the roof. For example, the gutters and downspouts had some small hail hits on all 15 buildings. The cost to replace these gutters was just over $27,000. The insurance companies will typically pay the actual cash value on the first check. As I said, the depreciation is loosely based upon the age and condition of the items being replaced. In this case, if the gutters were designed to last 100 years and they were 20 years old, the carrier would depreciate that item 20%. That means that the first check would be for 80% of the replacement cost of the gutters. Not to worry, once the work is done, the carrier would release the balance on the second check. In the case of the creek apartments, the asset manager could care less about a few dents in the gutters that you could only see when you were standing on the roof 3 stories up. Instead, he chose to apply those funds to help pay for their deductible. For the insurance company, this is actually an advantage, because if you don't replace the gutters, the carrier doesn't have to pay for the depreciation. This saves them money. In the case of this example, the carrier saved 20% of the cost of the gutters. Also, because the gutters were never replaced, the insurance company does not have to pay for them again in a future claim because they already paid for them once. That reduces the carrier's liability. Insurance companies don't mind that at all. In fact, if you wanted to take that money and go to Bermuda, insurance companies flat out don't care because you still have to pay the same premium. However, if you have a mortgage, the insurance companies will name them as a payee on the insurance check. This gives your mortgage holder control over how these funds are used, and each lender has their own policies. In most cases, lenders tend to be flexible if the property damage is being adequately addressed. However, you should always check with your mortgage holder for questions and concerns. For the creek apartments, this was not an issue because the mortgage company had no problem using the additional funds for the repairs that were more important to the overall well-being of the property. There was also hail damage to the window beatings throughout all 15 buildings and nearly all of the HVAC condensers. The clubhouse had a tile roof and a number of the shingles were cracked by hail. This roof was able to be repaired, but because the tile damage was not visible from the ground, the asset manager chose to apply those funds to the repair of the dry-rotted chimneys. Although the dry rot was not covered under their policy, there was enough left over to get them repaired with over $50,000 left over. Those funds were applied toward a more important issue related to the retaining walls on several of their other buildings. So why use an alpha member on your insurance claims? Well, first of all, our members network with independent public insurance adjusters that are more than willing to volunteer their time to represent your interest to your carrier. This provides you with free professional representation. Obviously, free professional representation saves the cost of a public adjuster. But more than that, after a hailstorm, or any loss for that matter, our members are more than willing to inspect the damage, evaluate your eligibility for an insurance claim, and provide you a report. This extends the capability of your current staff without additional cost. Few property companies have this type of in-house resource. Using our members allows you to outsource these tasks to professionals who are trained in this area without additional cost. This saves you money. Because our public adjusters provide their service at no cost, there is no downside. Also, our members are locally owned and operated and maintain an A+ rating with the Better Business Bureau, the highest rating they offer. We ensure that our members have over $2 million in liability insurance with another $2 million umbrella on top of that. They also have an ethics bond on every job they do up to $25,000. All this helps to minimize your risk. Dealing with insurance companies in a claim can be very time-consuming. Having a professional public adjuster represent your interest in a claim saves you time simply because you have someone else spending their time doing that for you. If you ever had to deal with the headache of working with an obstinate insurance company, you know the hassle it can sometimes be. Having professional representation eliminates that hassle. Our members take care of the headaches for you. You simply do not have to deal with it. Working alone with your insurance company leaves you vulnerable when your carrier digs in their heels and wrongfully says no. The important thing about this is having professional representation protects your assets. For property management companies, this helps to protect your clients. When you provide licensed professional representation on your insurance claims, you are helping to ensure that your clients receive all the benefits that they are entitled to under their policy. In an environment where carriers are all too often willing to cut corners, this representation is not only free, it is priceless. Also, because our members network with each other, you get the advantage of a complete package. We not only have public adjusters, but we also have independent insurance appraisers, estimators, independent dispute umpires, contractors, project managers, lawyers, and just about everyone else that you could possibly want when dealing with an insurance loss. Most importantly, the process works seamlessly. In a hail claim, for example, about the only thing you'll have to worry about is what color roof you want. Our members provide a full and complete service. In addition to that, when the work is said and done, some worthy organization gets 70% of the net profit. Well, there you go. That is an overview of the important issues related to filing an insurance claim and a little bit about our members. If you have an insurance-related issue, I sincerely hope you will give our members the opportunity to help you with your needs. Goodbye and God bless.